Hello, welcome everyone. So you want to trade on Euro USD. So let's just do a breakdown of the analysis this morning on the London section. So on the four, okay. So on the daily time frame, we have buy side liquidity taken out, sell side liquidity still not taken out, but price currently approaching there. So when we come to the 4 hours, when we come to the 4 hours, we have this 4 hours fair value gap which price came into, and then when price came into the 4 hours fair value gap, we see that we have a change of state of delivery, sell side liquidity pushed into, and then we have a massive shift to the upside, which is change of state of delivery. We see this one single bullish candle passing to the upside, changing the state of delivery of price. And then we have the order block. So price came back down, entered into the fair value gap. We can see first candle, second, third, fourth, even fifth, then before price pushing to the upside. So above here we have a 4 hours fair value gap which might be acting as a draw to pull price to the upside. So seeing all these confluences from the higher time frame, then it came down to a 15 minutes, and then price open. So this black line indicating the London section open. So price open, and then we have a sell side liquidity below here. So we see that as soon as price open, price began to um we started seeing price going down and then taking out this sell side liquidity. So as soon as price came into this sell side liquidity, then I went to a lower time frame on the 1 minute. So but then something else again. Notice that on the 15 minutes time frame, on the 15 minutes um time frame, no, sorry, yes, the 5 minute time frame. Notice that below the sell side liquidity, we have a fair value gap just below the sell side liquidity. So as soon as price took out sell side liquidity and then tap into the fair value gap, so now went down to a 1 minute, so price pushed to the upside, created a fair value gap here. Then we see price just spool from that point. So you could be targeting this up here, this high here, here. And the reason is because if you come to the 15 minutes time frame, you see that we have a fair value gap just above there. We have a fair value gap just above there. So as soon as price hits this buy side liquidity, which is just below the 15 minutes fair value gap, then you could exit from that point. So that's a 1 2 3, and yeah, so that's it on Euro USD. So but one thing I want to say is that, you know I like to use every opportunity to just talk to myself and to just journal and the mistakes I made, the improvement, those things I can work on, what I, yes, and all of that. Yes. So one thing I realize is that it is too important to understand higher time frame, to understand the higher time frame movement. For example, look at look at where price stopped at before going to the opposite direction. You get, and some of these things you can notice them easily, quite easily, observing from the higher time frame, doing a higher time frame top down analysis, going down to the lower time frame. You understand? You understand? And another thing again is that trying to look for home runs, that's seeking a lot of RRs. You get, placing stop losses and take profits at unrealistic positions can be quite um risky and dangerous. In fact, it does more harm. So one thing I realize from this trade is that number one, the higher time frame is too important. It doesn't matter whatever I'm seeing on the lower time frame. If the higher time frame is saying otherwise, then those things are inconsequential. The second thing is that I shouldn't be trying to seek home runs, trying to seek unrealistic positions, trying to look for unrealistic positions, trying to place my stop loss and my take profits at unrealistic levels. You understand? Um, just because I want to get more. That's the greed. That's the greed. That's the greed. Then thirdly, I must find a way to simplify my system. There must be something I'm always looking for anytime I'm coming to the market. Yeah, if it is the ICT 2022 um model, that's the turtle soup concept you want to stick with, that's fine. That's fine. That's fine. That's fine. So the more I complicate the system, the more it's I notice the more it's doing more harm and doing more damage to me. So I realize that it is better I simplify it. You get, I'm not trying to seek for home runs, but actually placing my stop loss and my take profits at realistic levels. It doesn't matter even if the market does times two into our direction. It doesn't matter. We have taken our part and then we have left. And sometimes that is what is going to save you. You never can tell. Market will just begin to start turning from that point. Just begin to start turning from that point. Yeah. Okay. So let me just recap again. 4 hours fair value gap. 4 hours fair value gap. Price came into 4 hours fair value gap. And then we also have a 4 hours fair value gap above, which might be acting as a draw. Then coming to the 15 minutes, marking out my section. As soon as the London section opened, price went down, taking out sell side liquidity. And we also have a 15-minute fair value gap just below the sell side liquidity. So as soon as price swept the liquidity, tapped into the 15-minute fair value gap, then as soon as we saw the change of state of delivery, then entering using the fair value gap, then seeking the nearest high, and in this case we had a 15 minutes fair value gap just above the buy side liquidity. So as soon as price went to that point, then we can come out from that point and close the trade. So that's it on this one for today. So two lessons learned on this trade. Number one, simplicity. 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 Number two, higher time frame, very important. So thank you so much for staying up to this time, and got to go do some other things and get on with my day. Thank you so much, and see you next time, guys.